Hello, everyone. Good evening. Once again, welcome to World Investor Education Week, day five. Today is the last day of this entire program, and so glad once again to see everyone joining in. And these are the people who I saw on day one, and it's so glad to see everyone uh, keeping this whole program alive till the end. I see a few more additions which came yesterday. So it's kind of a growing uh, user base, and really love this because first day I saw 40 people, and then 10 new people joined on the second day, and then that combined, and third day 10 more people, 20 more people joined, and then it is increasing. So this is amazing. Today I have, I'm almost, it's day five, and I see so many people, and I almost remember everybody's name now. So that's really good. I can really sense since when you have started and what at what point now you have reached. Just to make sure everybody can hear me and see me, please give me a yes or a okay, just to make sure that everybody can hear me. If you can hear me, please give me a yes or okay. All right, I can see a lot of people can hear me. That's okay. That's great. Great. Perfect. Perfect. So there are a few questions as well in the starting, which we have, and as usual, I'm going to give answers to all the questions. The few quick ones. Don't want to take leverage. Is it okay? It's okay. It's completely your choice because leverage using it too much will have risk. So normally I prefer leverage for the sole reason because it increases the productivity of your capital. So uh, there is no problem with taking leverage. It's just when you overuse it and you don't manage your risk properly, then it's a problem. So I think we need to have a discussion about how you can effectively utilize leverage in your favor, and then you can decide for yourself whether it is for you or not. However, you have both the options, so definitely it's up to you. Do the sequence of red or green candles indicate anything? So that's from yesterday. Um, the sequence of red or green candles at some point. So if you see a consistency in the formation of red candles on important time frames like 4 hours or one day, if you see three candles lined up for 4 hours, which means 4 hours, 4 hours, 4 hours, all red candles, which means 12 hours of negative pattern. So most likely the longer term trend could be on the downside. So the sequence, it does determine. I'll open the chat right away and tell you. Before we begin, a few important things for the new users who have joined today, and of course something I would like to repeat on daily basis. Uh, Whatever trades or strategies we are going to discuss today, they have their own embedded market risks. So please do not just see the strategy and apply it right away. Do a thorough study. Please talk to your financial experts and consultants. Calculate your risk, and only then try to use these. But at the same time, if you have, since you if you have a live account, please do not replicate the trades I'm doing. Please use your demo accounts if you want to do any practice. Uh, Throughout this session, whatever I have told you, the foundation of these things comes within the market situations. There are some fundamental concepts which we have studied theoretically, which we have tried practically, but obviously everything is subjected to the market risk. So you have to be very careful before you place a trade. Do talk to the consultants, talk to your experts, calculate your risk, and only then go for it. Second thing, please do not borrow money or take a loan for these kind of investments or trading or speculation. I showed you investment pyramid on day one, and I meant when I said that you have to keep some money, you have to form a base of the pyramid, and you have to keep some money for your rainy days or for your rainy years, or have an emergency fund for yourself, right? And then the remaining money, what you have, you can invest. So this is something which is really serious. So please do not borrow money, do not take loans, do not take money from your friends or family. Do not think that this is an additional source of income, and do not leave your business or job. uh, there are a lot of people, I've seen a lot of people who are using this as an additional source of income, but then they have been in the market, they have a certain amount of discipline, they have a certain amount of risk appetite, and maybe they're on the right side of the trade, so it works out for them. But it doesn't mean that if it works out for them, it's going to work out for you. Or maybe it works out for you, but it doesn't work out for someone else, or it doesn't work out for me. So please be very careful. Do not take this lightly. And that is one reason which I always start my session. Many of you might think that it's a kind of negative statement to start with, but this is what it is. I told you this is not one of those webinars or sessions which is going to promise you a package in a pen drive which can change your life. It is not one of those sessions which can promise you a Ferrari or a house or a villa. It's not one of those things. And it never happens. It never happens. If you have even attended any session and if they promised you something like it, it's a plain lie. It never happens. So don't fall for world's best trading techniques or 100% trading technical indicators. It's not, it doesn't work like that. You are in the market, you will face both. You will face a profit, you will face a loss. You have to understand, learn from your mistakes, and move on. That's how all investments work. If I were to talk about risk free investment, there is none. The biggest risk you have is the risk of not investing, because the value of your money is still getting eroded, right? Even when you walk out of the house, there is a risk of you meeting with an accident. Even when you cross a road, there is a risk. But what do? You'd see left, right. You understand that before I cross the road, I have to see left and right, and then I have to cross. I have to stop where it is needed. Exactly how investments works. You have to monitor them. You have to understand it, and it doesn't require you to be glued to the computer for 24 hours. There are systems in place. There are strategies in place which can help you, and that's what this session was all about. Could you please explain trailing stop loss again, really quick before we begin? Sure, sure. So today, guys, all we are going to do is be at the platform. I don't have any further presentation now. All I have to do is just be on the platform today, do some trades, go through a basic how to create a watch list, take some trades, put stop losses, trailing stop losses, and please open your demo accounts as well if you have. And we'll today learn about some trading strategies. We'll take some examples. We'll look at the market outlook for 2021, and we'll also look at a low dividend, low beta, and a good dividend portfolio before we leave. So my notepad is ready. I hope yours is. This is my notepad. Uh, Almost full the last page. So I have my another notebook ready. Without taking notes, uh, it kind of reduces your retention power. So I always suggest that have a notebook next to you. Now, before I start, I'm not going to take a poll this time, but definitely I'm going to ask you this question. What was the closing price of, no, I'm not going to say closing price. I'm going to ask you, okay, okay, if you have your platforms right, tell me, what was the closing price of gold yesterday? If you have your demo accounts, anyhow, just search for it and tell me, what do you see? What was the closing price of gold yesterday? And I'm saying yesterday, at what price it did close. Now you should know how to check the closing price. I'll give you a hint. You have to go to the chart. You have to change it to a daily chart. And once you change it to a daily chart, put your cursor on the candle where you can see the closing price. So now tell me, what was the closing price of gold yesterday? Definitely, I'll show you again. But before I do it, I want to know. Okay, 1864, 1864. Brilliant. Just 1 second, I think. I hope everybody can hear me right now. 1896 is not the right answer. 1896 is what is the price today, the highest perhaps. And 1864 is the right answer, definitely. Very good, guys, very good. 1864. I'm sure others are also trying to find it. Let me switch directly to my platform and let me check what happened to my gold position. I did put a trailing stop loss yesterday. So today I'm going to find out what's happening. Let me go to my platform right here. Okay, this is my demo ID. I'm going to put my password century12345, login, and see what's happening in my portfolio. I did put a trailing stop loss yesterday. If you remember, oh, it's going crazy. Very good. I wish I could take this withdrawal, but no problem. So now go back to the point and tell me what price did I buy gold at the first place? Those who have been attending my session day one, those who came yesterday, tell me what price did I buy gold? What was the price I bought gold? Come on, guys, you know this answer. Okay, I'm started getting these answers. Not the exact number, but you should be very close. So even if you're closer to that number, I told you what I'm trying to do. I'm trying to form an anchor in your mind every day by asking you this question. Great, 1828, 1828, 1829, 1820, 1827. Brilliant, brilliant. So everybody's on board with this, right? Everybody know that I bought gold at 1828. I bought 546 ounces today. So just understand, see guys, how it has worked out. Like from day one, it's been 4 days. In 4 days from gold, from 1828, it has gone to 1893. I had 550 ounces of gold, and currently I see gold 546. I have a $35,000 profit. But you need to see something very close. You see my stop loss. It's a trailing stop loss, right? If somebody remembers yesterday, I put my trailing stop loss. Let me show you history. So you will know where did I put my trailing stop loss. Yesterday I put my trailing stop loss. I hope everybody can see this number. It was at 1838 because that time the price was around 1858, right? So I put my trailing stop loss $20 down. Now I did not see anything in between, and today the price is 1891 and my trailing stop loss has already moved to 1877, which means the highest for today in gold is around 1897, 1896. So that's why my trailing stop loss has already moved to 1877. So that $20 gap continued since yesterday, and now the profit which I would have booked in gold, which was at 1838, now if it gold price comes down from 1890, it will hit 1877. So that's what a trailing stop loss is about, that you keep a benchmark, you keep a cap on your profits if the prices go down. But if the price continues to go up, now since yesterday from 1858, gold has gone to 1897. So my trailing stop loss from 1838 has come to 1877, right? That $20 difference has been maintained. So now my total profit is 34,000. If I book it now, I will book a profit of 34,000. But if it starts coming down, it will hit 1877. Now my purchase was at 1828. So anyways, my total profit will be around 25,000 or $30,000 because I have 500 ounces and it's almost a difference of $25. So this is the idea of trailing stop loss. So, but this means question, if it hits your stop loss, you're still at a net profit. Absolutely. So that's the idea of trailing stop loss. Why we call it a trailing stop loss? Because in a trailing stop loss, the stop loss moves with the price. Look at my hands. This was my current price. Let's say this was 1858. So I put my stop loss at 1838. Today, price is 1898. My stop loss has already moved to 1878. If it comes down, it will hit 1878. So earlier I would have booked my profit at 1838, but now I'm booking at 78. So I don't have to put a take profit. I'm just letting market do its own thing and my profits maximized. Had I kept a take profit, it would have hit my take profit and it would have closed. But I removed my take profit and kept a trailing stop loss instead. So yes, that worked out this time. But again, guys, needless to say, please do not follow the green. Understand this is a highly leveraged account. I've taken $1 million worth gold. So right now, I started my account with $30,000. Right now, I have almost $60,000. It's 100% return. But that 100% return could have been a 100% loss if gold was not in my favor. So please do not get carried away by these green. This is just to show you the math about it, and that's all. Also, I would like you to see what has happened slowly and gradually to Amazon. Okay, I am getting a lot of questions. So, okay, let me check this. I wonder why you always refer to gold as an example as a profit. However, we all know that the profit is too high because you start trading in demo in 1 million. So please take another example near to reality for us. So we know exactly what I said. So I'm just trying to tell you that, see, why I take example of gold. First of all, I'll give you the answer. Why I take example of gold? Because gold is a highly traded speculative commodity. A lot of day traders, they are looking at gold prices. So if somebody wants to trade on day basis, gold is a good instrument. Is it riskier? Yes. But you look at the movement in last 5 days, it has almost moved around from 1820 to 1890. So it has given you a $70 a movement. Instead of 500 ounce, if it was 10 ounces, you would still make $500 profit. Why I took $1 million position that day was to show you what happens in a higher leverage. And if you remember correctly, on the very same day, I had a loss of $15,000, but I just continued with my position because showing you profit or loss is not the agenda here. The agenda is here to show you that when you take a high leverage trade, what is the upside and the downside you have faced. So we have seen downside, we have seen upside. And to level it, I also took initially the trades which I took. I bought Tesla shares worth $30,000. I bought Amazon shares worth $30,000. So if you can see Amazon shares, I bought 10 shares of Amazon at 31.80. Right now it is 32.33, which means on 10 shares I have a profit of $500. In Tesla, I bought 47 shares. I have a loss of 97, 87, not much movement. I short sell McDonald's, which means I was expecting McDonald's to go down. Again, it has not shown much movement, so it is still around the same price. I have also put a stop loss and take profit. So that is something which you are just doing in the demo, guys. Again, I am myself saying this thing, do not get carried away by the greens and by the profits. That's not my idea. All I wanted to show you is how trailing stop losses work and how much movement uh, on an average happens. If you see on an average, gold is moving 18 to $20 in a day. So for all those people who want to day trade or speculate, gold is one instrument which can give you a movement upside, downside, both. Just have to choose the right quantity. Obviously, this is not the right quantity. With this account value, 500 ounces is not the right quantity. You put $500,000, you take $1 million trade, 1:2 ratio of conservative leverage, that's okay. But taking $1 million position in a $30,000 account, obviously it's high risk. So you don't have to take that. Okay, another question. Does the trailing stop loss link with the day? Because if the price drops, doesn't the trailing stop loss goes down? So that's the beauty of the trailing stop loss, Mr. Mohammed, because if it goes up, the price, the trailing stop loss moves. But if the price goes down, the trailing stop loss doesn't go down. Otherwise, the whole purpose would be defied. So today, if you see, it has come to 1877 because gold price has gone to 1897. So there's a $20 gap. If from 97 it comes down, now from 97 it has already come down to 91, but your trailing stop loss is still at 1877. So the trailing stop loss does not comes down. It goes up with the price, and then when price starts coming down, it will hit where the trailing stop loss is. The trailing stop loss doesn't come down. Can the buy or sell volumes indicate any trend of price? So volumes are incredibly helpful. uh, you cannot see in this platform, but the consultants can really help you. Or you can take any other website and you can see investing.com and others, and you can see volumes easily. Uh, See, volumes play an important role for institutional investors who have to do a bulk buying, because they want to find a price where the maximum trading has happened. Okay, so if the price has come down and the volumes are higher, so that's the point that a lot of people have now sold it, which means now will be the good time to buy. So the prices are expected to go up. So for institutional investors, they look at volumes. It does help. If your volumes are incredibly high, which means if your quantities and trades are higher size, then volumes can help. If not that much, if you are trading in 10, 20 ounces of gold, then volume does not really is going to benefit you. Okay, it will give you a good indication of the trend, but for institutional investors, they use a lot of times they use volumes to get take bulk trades, because the institutional investors, they don't do retail trades, they do mostly buy at huge quantities. Okay, one more question I'm coming in. Guys, keep asking more and more questions. Today we are going to do questions, we're going to do trades, we're going to see a lot of things. If you have bought shares on margin and holding it for some time, do you get the dividend when declared? You do get a dividend when you declare. Uh, Let me tell you this thing. Right now, the platform which you see is derivatives. Okay. So these are not the real shares. You don't get the ownership of the stocks, but you do get the idea. You do get a contract to speculate on it. So right now, the Tesla Motor shares you see, if you buy it on margins, you're still, if Tesla declares a dividend, you will get dividend, and that will be credit to your account. The dividend tax is deducted at source. Normally in US shares, it is around 30%. So the dividend tax is deducted at source, and then you receive the remaining amount. So dividend is declared and you receive dividend. In fact, I'm going to share today with you a dividend portfolio, which are less volatile stocks and have a dividend yield of around collectively 7%. So I'm going to show you that as well. Okay. Now, also, while yesterday we were looking at gold, we were also looking at something called oil. And if you remember the oil inventory data, right? Can somebody tell me what was the price yesterday? I did write it on my notepad. If you wrote yesterday, you would know that what was the price before the news for crude oil. What was the price of crude oil? If you have note this down, I told you to note this down. Anyone? Use your chat options. Tell me. I have wrote it down. I know what it was before the news came out. For the very reason that I could compare it today. Okay, I see one person wrote down. Oh, great. Two people. Three, four, five. Okay, 8, 10, 12. Oh, that's amazing. Everybody wrote it down. That's good. 47.48. That was the price. What is the price today? 48.26. So oil prices have moved, right? We have seen oil prices moving. So we have seen oil prices going up after the inventory data yesterday. So you see how the resistance has been broken, which we were talking about yesterday, the 30 minutes, and it has gone higher, right? So what I was talking about yesterday, that once the resistance get broken, it might give you a bounce back, right? If you had bought 100 barrels of oil, right now the price is 48.27, which means there is a difference of almost around 70-80 cents. If you have 100 barrels, you're making $80 profit, right? Okay, question, there's a Brent and Texas, which one to normally follow? Anyone? Anyone? Brent is Brent is actually a benchmark oil, because entire Europe, UK, Saudi, Russia, they are following Brent, and this is the Brent oil which comes from the North Sea. But West Texas is also traded equally. It's a US oil. There's a difference between the prices of Brent and WTI, but most of the time the trend remains same. So it's not like if West Texas is going up, then Brent is going down. That very rarely that happens. So you can follow any of the oil and you can trade in any one of those. Right. One more question here. Is there any practical difference between guys keep listening to the questions also. That's why I'm talking it out loud about the questions that maybe this was in your mind and you may not have asked. So these are good questions again. Is there any practical difference between holding stocks directly versus through a derivative account? There's a big difference. There's a big difference. If you use a derivative account and buy stocks, hold stocks, uh, you don't have an ownership of those stocks, which means if the broker or if the company gets liquidated or bankrupt, then all your trades will be closed because you don't have the ownership in those companies. You will get your remaining amount back given the broker is properly regulated, but you don't have the ownership in the derivatives account. However, if you use a account like, for example, the ones which we have, if you want to hold actual stock, then in the case of the bankruptcy of the broker, they will give you enough time to shift your portfolio to another exchange based broker because you have the ownership in these stocks. So the difference between a derivative and a non derivative account is derivatives, if the derivative provider or the CFD provider gets bankrupt, then you don't have your positions anymore. They are automatically liquidated, and whatever the money you have, you get it back. So that's the difference. So you have to understand. But otherwise, if you see from an advantage point of view, derivatives have a lot of advantage. The margins are much less, the leverage is higher. So if you want to block a certain amount, take a quick trade, you can. However, in an exchange base, there will be a specific number of stocks which you have to buy, or sometimes you put an order, it takes time to get executed to because the buyers and sellers are being matched. So those are the things. But again, you can take any. If you're taking a derivatives one, please make sure that the CFD provider or the derivatives provider is strong, has a good vintage, has properly regulated, and has a good market reputation. Don't follow the CFD providers who are giving you a bonus on deposit, who are allowing you to open an account so you can get $500 to trade in the beginning. All that is just marketing gimmick. Please make sure that the regulations of these brokers are from ASIC or FCA. These are the most important ones. Uh, the regulations which comes from Cyprus or the regulations which comes from British Virgin Islands or Bermuda or all these areas are not really very rigid or effective. Okay, it's very easy to get a brokerage license in Cyprus or Cyprus Securities Exchange, so it's a piece of cake. That's why please do not uh, think that a CISEC regulation or a Bermuda or a BVI based regulation or Cannon Islands, for example, all these are very easy regulations to get, easy licenses to get. And sometimes a lot of CFD providers may show you all these licenses and you might feel that's so serious, but it's not. Always follow a Financial Conduct Authority, a UK FCA license or an Australian license like ASIC, Australian Securities and Investments. If the company is here, then definitely SCA, Securities Commodities Authority, DFSA, Dubai Financial Service Authority, DFC license, whichever you are looking at. But there should be a proper regulation. One more thing, guys, central bank license here, especially in Dubai, central bank license may not be more effective. Any wealth management company or a consultant needs to have a SCA license, Securities and Commodities Authority, SCA. You can search in Google if you want to, because SCA follows FCA in UK, and they have standards related to ethics and competition and intellect and continuous professional development criteria for the staff also in the company. Like my team and our company, we have to go through so many professional development courses year on year just because we are regulated by SCA and it is the requirement. Otherwise, the licenses would not continue. So this is the constant practice which keeps going on, right? Now, guys, we saw oil prices, we saw gold prices, we are looking at what is happening to our positions. Now, let's try to understand first and foremost how to put this anchor in your mind, how to make you an expert of what to buy, what to sell. Now, I told you it's going to be difficult, it needs hard work, but I have a very easy way out for you how you can very easily form an anchor in your mind. First things, if you have your platform open, go to this option, this wonderful option called watch list. Okay, here, right here, watch list, and click on create new watch list. Right here, click create new watch list. Now, when you will click on create new watch list, a separate tab will open with watch list number 4 or number 5 or number 6. You have to give a name to it. So go on the left corner right here and amend this. I'm going to amend this as investors week anchor. You can name it whatever you want to. Done. Now my watch list is created here, investors week anchor. Now what I want you to do, guys, what I want you to do, irrespective of your interest, because if I would start asking what is your favorite and what would you like to see, what's your favorite, then I will only get your favorite instruments. But I want you to get out of your comfort zone and track all these instruments and then decide for yourself whether you want to trade, speculate, invest, whatever you want to do. Once again, I'm showing it to you how to create a watch list first. Go to this second option called watch list right here. Everybody should be able to see this watch list, and then click on create new watch list. So when you click on create new watch list, a separate tab will open here, and then you have to go on the left corner where there are three lines and then amend the name to whatever you like to, and then click outside that name, and now you have your watch list ready. You can recheck it by going on watch list again, so you can see the name of your watch list right here. Now once your watch list window is done, when it is calculated, once it is calculated, once it is prepared, you have to add your instruments. Now, here's the thing. I'm going to give you some popular products, something which is traded on day basis, then some instrument of your choice, and then we are going to track these and I'll tell you how. Let's start just next to the name. There is a small plus sign right here, add product option. There's a plus sign right here. I hope everybody is able to see it. There's the name of the watch list, and then there's a small plus sign right here. Those who do not have the demo account, don't worry, just look at this and talk to your relationship managers later on. Get a demo account, and I'll do a personal one-on-one session with you, and I'll explain you how this works. Meanwhile, just look at this. Next to the name, there is a plus sign, add a product. Click a product, and first and foremost, add gold cash. Gold cash commodities. Click gold cash commodities and add gold. Then add crude oil. Search for crude oil. You can add Brent also, the first one which you see, and then type crude oil again and go West Texas. So you add both Brent Feb and West Texas Jan 2021. I hope everybody is able to do it. Give me a yes or okay if it is easier for you to do it, if you can do it easily. If you have added one product or two products or all of them, give me a yes or okay. I used to do a lot of seminars before the pandemic. Everybody, we used to be in one room, and it used to be amazing energy, and everybody used to do this platform together, add these products, ask questions. It's a different energy. But I have to say, how much responsive all of you have been, so responsive on the chat. Feels amazing, and I have no shred of regret that I cannot do a seminar anymore. It's amazing when I'm doing webinars. So I see so many people, you guys are adding your products, so it's going out. You don't have to see position, you have to look at the watch list. Okay, so positions is in account. Just next to the account, there's the option of watch list. You click on watch list, create new watch list, and you can do it. Somebody asked me how to remove a product. Very easily, you can remove a product just by clicking here on the left side three dots, and the bottom option is remove from watch list. So you can easily remove from watch list. Okay, very easy. Just click on these three dots in the left corner, go down. The last option is remove from watch list. So you can easily remove it. Couldn't add gold cash. Why not? Just write gold and press space button, and you will see a list of products, and one of them will be gold cash. Let me show you once again how it is done. Go to add a product right here. Next to the name, type gold, and you will see the very second option, gold cash commodities. Just write gold and you'll be able to see it. Right? Then you write crude oil, first thing Brent, and then crude oil West Texas. Then I would like you to add EUR/USD, Euro USD. Okay, one of the major currency pairs, Euro USD, EUR/USD. Keep writing it on your notebook if you are, if you're not able to do it at the real time while I'm doing. EUR/USD, currency is the first option, Euro USD, and then write GBP/USD, which is pound. So euro dollar, pound, and dollar. Add it now. Okay. Okay, 1 second. Sorry, can't see what you mentioned. Oh, okay. Let me just zoom in my platform so everybody can see this. Once again. Okay, now I've zoomed in my platform. Is there a way to group or label the product? Example, oil. You can make separate watch list if you want to. Or you can go to the product library and go to commodities. So there are groups already made. So if you go to your product library, guys, one question was asked, this is your products, this is your library. If you go to commodities, select commodities, and you come directly to commodities, and in commodities, there is subtype right here. Look at this. So there is a subtype which says energy. And when you say energy, you click on energy, and you will see all the kinds of oil and crude oil Brent, first one, and then West Texas. So you can even click on those three dots and add to the watch list accordingly. So you can do it either way. And then go back to your tab, Investors Week Anchor, which I have put. After the watch list, the next step did not work. Okay, just try once again. Tell me what you're trying to do. Are you trying to give a name? Are you trying to add a product? To add a product, please see just next to the name, there's a very small plus, magnifying glass plus option, the search or the plus option. To click on this add product, you can search and add. There's a search and add option. You click on add product. I'm already adding euro, pound. I've added gold, oil, right? Just want to make sure that everybody is on pace with it. If not, best thing what you can do is just write it down on your notebook, okay? And then I'll show you what you have to track. So even if it's on your notebook, it's good enough. It's just much easier when you have the platform right away. I found cotton is always in good profit. What's your idea? Okay, definitely. I would like to study about cotton and then give you a view. Not following cotton, but if you are looking at cotton and if it is giving you a good profit, why not? So add cotton on your watch list. Those who want to. If you're tracking it, then definitely it should be on your watch list, right? Now I'm going to add. So let me add cotton as well, since I just heard from someone. Okay, cotton right here. Then I will add a stock market index, SPX 500. We have been talking about SPX 500. So when you write SPX, which is S&P 500, the first option you will see is US SPX 500. That's a stock market index, guys. So I added an index to it. I will also now add some stocks and the usuals, which I have seen you guys have mentioned so many times: Apple, Tesla, Boeing. Remember all the stocks which guys told me. Boeing, Amazon, okay, and okay, tell me more. Tell me more. Anyone who wants to add more stocks? See, I'm just preparing this watch list for myself. So, and I'll tell you how you can use this. Tell me more stocks, guys. Tell me more stocks. Tell me more companies. Which are the companies you would like me to add? It's a demo account, so please, if you can make it US based, will be much easier. But tell me which other companies? Shopify. Okay, great. Shopify, Airbnb. Yes. Okay. Let me add. Let me add. So BNB right here. 147. Oh, great. Shopify. Remember, we saw Airbnb at 123. Today it is 147. It's like 3, 4 days before. Brilliant. Okay, Airbnb, Shopify. Was somebody tracking Airbnb? Pfizer, AstraZeneca, Moderna, Microsoft. Brilliant. Okay. Let me add right here. Pharma. So Pfizer, Moderna. See how easy it is, how quick you can add to your watch list and you can see their price because your watch list is going to be here now. It will not be deleted unless you want to delete it. So it's right there. AstraZeneca US and Microsoft. Brilliant. I'm adding Microsoft now. So Microsoft right here. Okay. Okay. Microsoft, Moderna, everything. Okay. Added. Perfect. Now I have added what you need to do. I have all these shares. There are a lot of other products also. If you want, you can add. It's up to you. But now, what I want you to do is click a picture of this if you want to, and add this on your watch list later on. But today onwards, what I want you to do, I want you to form an anchor in your mind right away, every day, and note this down. The good time, the market hours for trading are first and foremost, if you're a morning person, then 4 a.m., 3 a.m., 4 a.m. UAE time, that's where Asia opens, Japan, China, right? If you want, you can, if you want to trade during those times, gold gives you a good movement in the morning, especially between these times when Asia opens. Okay. So whenever you will see the movement of gold during that time, it will be phenomenal. So that's the morning for you. But if you're not a morning person, then in the afternoon around 12 p.m. UAE time is when UK and Europe opens. UK and Europe opens, which means German index. So I've not added any European index right here. Let me add German 30. German 30 right here. Yeah. German 30. This is a German index traded a lot. Also, I'm going to add UK 100, the UK market right here. Right. Perfect. Now, all you have to do is, so 12 p.m. is when UK and Europe open. So there's a lot of movement in Euro and European indices during that time. And an important news about the GDP data or unemployment data about Europe. Normally, these kind of news comes out around 1:30 p.m. UAE time. Okay, so you might expect a movement during that time also. So 1:30 p.m. 12 to 1:30, good time to trade in European equities. Then time passes and comes 5:30. Now 5:30 is when a lot of important US data starts coming in. Okay, so 5:30 p.m. UAE time, you can look for US dollar, gold, S&P 500, a lot of US based asset classes, and then 6:30 stock market opens, right? And that's where the session overlap. Europe is already open, and now US has opened, so you see a lot of fluctuations. And this is, I'm telling you, US time. So 6:30 p.m. Sorry, UAE time. So 6:30 p.m. UAE time is when US opens. So right now, when you're looking 8 o'clock, it is one of the most prime time when the trading is happening, and you can see a lot of fluctuations. Now, these key times, I want also what? want you to check the prices of all these instruments. See, shares are going to open 6:30 p.m. UAE time, okay? Which means all you have to do is track shares after at 6:30 when the market opens and see what is their opening price, okay? What is their opening price? That's the most important thing. At what price stocks opened? Now, once the stocks are open, every 2 hours keep checking their price movements, okay, just 2 hours and glimpse just 2 minutes and see, huh, okay, Pfizer started at 35 but now it is 36 or 37, so it's up today. Do this exercise for 7 or 8 days, and ninth day you will see yourself as a completely changed person. When you look at gold prices now, tell me what has happened in last 5 days. If you look at gold prices now, 1891, you have in mind, oh, he bought at 1828. It's 1891 right now. Tomorrow, if you see it has come back to 1870, then again you see 1880, then you see 1830, then you see 1828. Like, oh, 1828, that's the price he bought it first. Let's see where it goes. And if it bounces back again from 1828 to 1880, again comes down to 1828, bounces back to 1880, you will know that 1828 is a very strong support. Okay, so the idea to tell you to keep tracking this, don't invest, don't trade, up to you, whatever you want to do, but keep a watch. That's why a watch list. You may not be trading in all these instruments, but it will not impact you if you just keep a watch. Today, the S&P 500's low is 36.98. Okay, just give me a second. Extremely sorry. 1 second. Yeah. Now, if you see all these things, if you see all these stocks, the today the lowest for S&P 500 is 36.98, the highest is 37.24. So now one thing I'm going to tell you today is the average price movement in all these things. Starting with gold, gold gives at least a movement of 18 to $20 these days. Daily, 18 to $20. Okay. Oil moves at least $1 to $1.5 on day basis, right? Then we look at Euro USD, 60 to 80 points. Same for GBP USD. S&P 500 easily around 25 to $30 moves every day. So you can easily understand that what is the average range which I have to trade within. Question: how long we can have access to the demo accounts? As long as you want to. It will expire every 10 days, but then you call your relation manager, ask for another. But please understand this, the demo account is for you to be familiar with the app or with the platform. It is not for you to expect whether I will make money or not. If you make money in a demo account, it's not a guarantee that you're going to make money in real. If you lose money in demo account, it's not necessary that you're going to lose in real. You use the demo account, but make sure that at some point of time you try to capitalize on this and use demo for your understanding, so that the working on the platform is seamless, because it's you who has to execute the trades and click a button. So you should be very well versed with how to buy and sell. Okay, is it possible to set that I can control the number of times I can take leverage and not get carried away? A very good suggestion, a very good suggestion, a very good question. You cannot set the leverage. That is something which is not possible. But I have one news for you. Currently, a lot of regulators from Australia and UK, UK regulations have already done this. Australian regulations are also through with it. In March, anyways, the leverage for major commodities and currencies and indices will be restricted from 500 times to 30 times. So till then, I would just suggest you that trade within limits. Don't get carried away. Anyways, in March onwards, the rules are going to change, and the retail, the leverage for retail clients is going to come down. If you want higher leverage, you have to show yourself as a professional client, for which there are one or two criteria which you have to fulfill. And you can be a professional client, you can get higher leverage. So yes, the answer to that question is very soon this is going to happen. Till then, if you're trading, just be careful. In the next 2 3 months, anyways, the leverage is going to be reduced for the retail clients, right? But please do understand this fact that you have to keep a track on the products which you just added to your watch list. That's really, really important. Now, something I want to share with you today, and this is something which was created by our research a couple of days ago. So I think we are going to discuss some trading strategies before we go back to the outlook. Somebody asked me last time about um, a dividend based stocks, that if there are some stocks which have a good dividend. Not sure, I don't remember the name, but again, this is a dividend portfolio which we have created through our research department. It's a long-term dividend portfolio, guys. So I mean, take it an year max, because I would talk long term about that. Long term dividend portfolio, and this is for a duration of, as I said, 1 year or more than that. It depends what you define long term for yourself, and how much returns you make in a year. If it works out for you, then 1 year was a long term. If it doesn't, then 2 years can be a long term. But normally, long term, when we say in financial markets, it's between above 1 year, 2 to 3 years. However, what we have seen in last uh, few days and how the volatility has worked out, 1 year could be a big change or a big movement which can happen throughout. Now, the very essence of this portfolio, you can take pictures if you want, note down these names, add it in your watch list and track them and see how it works out. The collectively, all these stocks, which I'm going to show you right now, this has a dividend yield of 7%, which means if you employ all of this in your portfolio, 7% you get around only through dividends if you add all these stocks. Their sectors, okay, loose connection. Can all of you can hear me? Please, this is a very important portfolio I want to discuss. I want to make sure everybody can hear me. Uh, okay, is this just one person or two, three people more? Can everybody hear me? Give me a yes or a okay. Okay, okay, okay. Most of the people can hear me. Okay, anybody, please, if you lost connection or lost a voice in between, don't worry. This will be recorded on. It's recorded. It will go on YouTube, and you can talk to me personally, one-on-one session. We can discuss it. Yes, it is 7% annually. Uh, this is if you hold the stocks for 1 year, the whole dividend cycle, it has a 7% dividend yield. So that's 7% annually. But that's the dividend yield. You also have to understand that when you buy these stocks, you have a risk of a capital loss. If the stock price goes down, then you lose in capital. But yes, there is a 7% dividend yield which goes through. And if the capital gain is the added bonus, if the stock price goes up, then of course you get a capital gain over it. Now, these stocks belong to different sectors like energy, industrial, real estate, consumer defensive, and communication services. You can have your own weightage in this. We have given equal weightage to these stocks. The beta of these stocks, somebody asked me about beta yesterday, so we thought that we'll make sure that we prepare a low beta portfolio. So the beta of each stock is less than 1, which means if the market falls down by 5%, and if the all the beta of these stocks could be zero point 0.5, for example, sorry, if the beta of any stock is zero point 0.5, which is less than 1, so if there is a fall of 1% in the market, the stock will fall by 0.5%. That's what beta means, right? If the stock market goes up by 10%, then the stock might go up by 5%. So that's what beta means, the sensitivity and the volatility in the stock. So most of these shares, most of these companies have a beta of less than 1. So these are less volatile stocks. Question, I suppose one does not need to hold these stocks for long to get dividend. What is the right time to hold them for getting? See, if you want to get, because these dividends, good question. Somebody asked me a question that do I need to hold these stocks for throughout the term to get a dividend? Dividends are declared every quarter. So when I say a dividend yield of this portfolio collectively is 7%, which means I'm including all the 4 quarters, which means you need to hold this stock for at least 1 year to complete the entire dividend cycle. So if Coca-Cola declares $3 dividend or $3.2 dividend, that means that $3.2 is for 1 year. You will get every quarter. So if quarter one you had the shares, so you get 0.80 80 cents as dividend, but then you sold the stock, so you are not eligible for the second quarter dividend. Similarly, you bought the stock again in the third quarter before the dividend during the ex dividend date, so you will be able to get dividend. So if you want a complete dividend cycle, then you have to hold the stock for at least 1 year. Okay, the beta helps in selection of stocks for trading in shorter time frame. How should we select the stocks on basis of beta for 1 year? No, so it is not necessary that it has to be for the shorter time frame. See, it depends your requirement. If somebody says that I want to invest in a stock with less volatility, right? Now, less volatility will be what? If a stock has a beta of zero point 0.2, that means if stock market index fell down by 1%, that particular stock just fell down by 0.2%, right? So you have to understand that how volatile you want the stock to be. More volatile stock, higher chances of capital gain or capital loss. Less volatile the stock is, the price movement, the capital gain or loss may not be too much, but you will, the low beta stocks sometimes have good dividends. Most of the time they have good dividends. So that's why when we are adding these stocks into it, we also made sure that the volatility in these shares is less. So if you buy it and keep it for a year, because there is so much market movement happens throughout the year, so a low beta stock can actually help you to buy a stock which is less volatile, right? So these are the different sectors which you are looking at. Now, without further delay, let's understand this. Now, look at these stocks. Okay, there are Bloomberg analyst recommendations. What are analyst recommendations? The analyst recommendations, there is a set of Bloomberg analysts which are rating these stocks into buy, hold, and sell, which means the first stock, MPLX, there were 19 Bloomberg analysts, out of which 13 of them suggested a buy and 6 of them suggested to hold, do not take a trade. If you have a buy, just hold on to it. Nobody recommended a sell. Similarly, the other one, Annaly Capital, 13 analysts recommended, 9 out of them suggested a buy, 4 of them suggested a hold. Now, if you see Imperial Brands, out of 20 Bloomberg analysts, 15 of them rated it a buy, 4 of them hold, 1 of them suggested or recommended a sell, right? So we are going with the different stocks right here. You can see their projected dividend yield. They have separate dividend yields, 11%, 10%, 9%, 6%, right? You can see their 52-week high, 52-week low, and their current market prices as well. It is mentioned right here. And then other stocks, Orange, Philip Morris, National Grid, FB, etc. So let's start with the very first stock, oil and gas stock. MPLX is the first company which we are looking at. Okay, question. How is dividend yield calculated on the portfolio? It is based on the average price of shares during the year or dividend. So dividend yield is very easy to calculate. You have to understand, see, dividend, whatever is the total dividend per share. So for example, calculate it for yourself if you want to. Say Coca-Cola gives you an annual dividend of $3.2. Okay. So $3.2 is the annual dividend. Divide the annual dividend, okay, put the dividend, whatever is the annual dividend per share, divided by the current price of that stock. So when you buy when you divide it by the current price of the stock, whatever number you get, multiply it by 100 and you will get it in percentage, the dividend yield. So you can try this if you want to calculate the dividend yield of any stock. And what does the dividend yield tells you? This is a percentage expression. Okay, it's like the total dividend divided by the current price of the stock. It tells you that how much a company pays out in dividend each year relative to its stock price. Okay, so that is something which is good. And obviously, please, since we are talking about dividend yield, please remember this also. A higher dividend yield may not always be a good sign, because if the company is returning so much of its profits to the investors rather than investing in the company and growing it, then it may not be a good sign for the future. Okay, yes, some of these companies which have already grown, they try to distribute much of their profits as dividends, but then you have to see it company wise. A higher dividend yield may not always be a good idea to invest into. So that's why you can take a suggestion from your financial consultants and experts and value their balance sheets and see how it works out. Okay, so I would repeat again the example. So what I was saying was, if the Coca-Cola declares $3.2 as dividend for the annual, so you put 3.2 and divide that 3.2 by the current stock price of Coca-Cola, whatever number you get, multiplied by 100. So you will get your dividend yield. Okay. Now let me show you the first stock, MPLXP. Now this is an oil and gas company, guys. The third quarter results 6% ahead of the estimates. Yesterday, day before yesterday, I told you the importance of beating the Wall Street earning expectations. Right now, third quarter results for MPLX have been phenomenal. They have 6% ahead of the estimates. Right, there will be a $1 billion share repurchasing program. They are also trying to have a positive free cash flow goal by 2021. So that's a good sign. They have a good distributed cash flow of $1 billion. So that's good. The distribution coverage is 1.39. So guys, what is distribution coverage? Distribution coverage is compared to its cash flow. So when we are talking about, so again, these are terminologies, but you don't have to get into too much detail. But I will still tell you how the distribution coverage ratio works, since it is there. Like, how much is the distributable cash flow, the cash which can be distributed to the shareholders? Okay, so the distribution coverage compares the distributable cash flow which is generated in a period to the total cash distributions paid for the period. Now, the very idea of this ratio is that if the company has generated enough cash for distribution, that's the whole idea. If this ratio is above 1, which you can see right now, the distribution coverage ratio is above 1, that means the company has generated enough cash to distribute it to its shareholders as well, right? And of course, they have reduced their capital expenditure in the 2020 by 700 million. They have also controlled their operating expenses. So capital expenditure is the expenditure of fixed assets, operating expenses which are for day to day. So this is something also which they have reduced, and it is expected to improve the company's bottom line. It's a dividend stock. It's attractive due to its logistics and storage segment. It's much more stable. And as the vaccines comes out and COVID-19 post recovery, it can be much more promising as well, right? So that is something which you can look into, guys. This is just one explanation. Obviously, there will be a lot of different explanations to these stock. Next company, Anale Capital Management. This is related to real estate. A lot of you shown interest in finding out whether we can invest into real estate companies or not. So this is also one of those companies. This also has reported a positive earning in this quarter above the analyst expectations, and it has beat down the Wall Street expectation, outperformed it. So their stocks went up around 3.5%. It's good. Their income are also, the core income, if you see, is above expectations. Net interest income also is above expectations. So that's something good. Plus, the USP of this stock is that entire portfolio in this particular real estate company is mostly consist of the managed hybrid residential mortgage with 80% of its capital invested into agency MBS. You just have to understand this agency MBS, guys. MBS means mortgage backed securities. Okay. Uh, the debts, debts which the assets which they have are backed by a security. And agency MBS means that a government recognized, a government based agency. So if your 80% exposure is into agency based MBS, then it's a good thing because the risk is less because these are government agencies. 20% is invested in credit assets, which is the other assets. And there is a lot of funds which have a securitized debt. So they have securities also for the debts, and their threshold level is above 5%, which improves its liquidity and sustainability. So that's why we are looking forward for this particular company, and we are showing this to you. Okay, when you have time, AstraZeneca is not showing. Is this normal or there's a certain reason? Could you be any advice is investing vaccine Pfizer? See, one thing which I said in one of my previous webinars, uh, Moderna, Pfizer, all these companies which are healthcare based, even before the vaccine came out, their stock prices have jumped over a period of time. So all I'm trying to understand is there is a heavy chance that pharmas and healthcares have already priced in that action of getting the vaccine in. If you have seen, Moderna has gone up by more than 200, 300% over a year. So even after the vaccine comes in, even after the new revenue stream in flows in, the valuation of the company and the stock price, it may not go too much. So keep a check on the healthcare companies, but please make sure that you are not overly exposed to healthcare and pharma, especially in this time of everybody talking about vaccine. Okay, every company is going to come up with a vaccine, but a lot of price rallies have already happened. So markets may have already priced this news. Even if you see, especially Pfizer's valuation, it is not more than 40 to $43, even after the revenue counted for the vaccine. So that is again something which you have to see, right? Now, coming back, next company, Magellan Midstream Partners. Again, this is related to oil and gas. So let me just take another sector, consumer defensive. Imperial Brands. Now, Imperial Brands resulted 0.8% growth in their organic sales. Uh, they have cut down their 2020 dividend, so they have secured over $1 billion. That is something which is good because sometimes cutting down dividends and cost is a good idea. ExxonMobil did not cut down its dividend, so the stock price went down because as an oil company, they increased their exposure and they did not cut down their dividends. So that has affected the health of the company. So that is something cutting down dividends at times is turns out to be positive for the company also. There's a strong brand identity in large regions with increasing consumer base, such as UK, Ireland, France, and Australia, and can allow management to price offerings aggressively to boost cash flow. So this is something again, guys, which you can look into. Changes in consumer behavior with higher spends allocated to tobacco and demand shifts between different market and channels will be favorable for the company moving forward in 2021. And then we have Vodafone. Again, their quarterly results have been brilliant, outperformed everything. They're again, we are talking about 5G technology coming in. So whenever the 5G comes in and everybody is ready, the telecom community or the communication companies are going to take benefit out of it. Their outlook is still positive, expected to have a rapid data growth on account of increased 5G presence would lead to new tenancies of new sites. So most of the analysts are expecting around 26% increase in European tenancies between financial year 20 and 25, and a further 12% from there. So, and Vodafone has a very promising dividend, guys. So you might keep a check on that. Then again, communication services company, which is Orange. Again, there is a lot of growth for this company in France and Spain. It has a certain amount of momentum. They have reduced down their capital expenditure. So a lot of free cash flow is being generated and available for the shareholders. something which can be a good idea. Consumer defensive, again, Philip Morris, a cigarette-based company, global cigarette market providers. So we already did one tobacco-based company, but you can just have, again, for the dividend basis, we can check. So like this, guys, there are National Grid, BAE Systems, AbbVie is into healthcare. So again, third quarter net revenues increased by 50%, earning per share brilliant. So a lot of global net revenues have been going up. They have applied for a new indication to the US FDA, uh, and also they have announced a collaborative research alliance, which I can see in this portfolio. Bullish momentum is expected to continue as the launches of Skyrizi and Rinvoq act as an attractive catalyst in providing leadership position in immunology as well as several line extensions. So one thing with the healthcare and pharma stocks is that if FDA approves uh, them, then FDA approves their drug research, they might get a very good boost. Okay, another question here. Different Are there different classes of shares? Example, Alphabet. Some stocks have different classes, but it should not really bother you. You can buy any class you want to. Surprisingly, we did came with a trading strategy where we saw the gap between Alphabet A and Alphabet C, the price difference, and we kept tracking it unless the gap became bigger, and then we sold Alphabet A and bought Alphabet C, and made profits on the arbitrage. So that is not happening currently, but if it happens, then definitely we are going to tell you how to take advantage of different classes of shares. A lot of companies are doing share repurchases. It's a good sign. Are they trying to support their price, or is this an opportunity for the treasury to take advantage of buy low and later sell high? So see, even when we are looking at this particular portfolio, there were couple of companies which were doing repurchase. See, buyback normally is a decision. Company buy back its own shares, and sometimes they do it to boost the value of the stock. They It does improve the financial statements also, because the it kind of, you are giving the capital back. So sometimes they tend to repurchase shares when they have cash on hand to give that particular stock an upswing. So if there's a question that how it benefits shareholders, it is just the stock repurchasing will allow a company to reinvest. And what happens is, if, for example, you look at the benefits of buyback to investors, it's just that when they do a repurchase, the stock prices increases and the shareholders make money over that. So that's the only thing. Most of the time, a repurchase program will increase the stock value. So it's a positive news. Is it a good thing or not? It depends again on a lot of things. We have to see that whether it is affecting the retained earnings of a company or not, right? Um, Whether it is good, if there is extra cash, should it be given as dividend or should there be a buyback? So there can be different reasons. I mean, it depends on, again, a company to company. Like Apple has been repurchasing shares as just because to boost the share price and provide that shareholder the value which they deserve. So sometimes there are a lot of tech giants which try to generate a return on their stock, and that sometimes becomes a better investment for them rather than doing anything else. And there has been a large rise in buybacks over the last decade. So most of the companies have taken advantage of these undervalued stocks, and it's really hard to argue because at the end of the day, the share prices go up. So there are different options they can do. It's a long topic. We can always discuss about it. What's the idea? Apple stock almost sleepy after split, but depends. I mean, if 5G really starts developing, I mean, I was never fond of. The only reason why Apple stock is a good stock, it has a lot of cash. From an innovation point of view, now you know why Apple is something which has been growing for some time. They're they're getting a good amount of revenue from their services sector. So their revenue, normally people feel that they're making money from iPhone sales. iPhone sales are not that much, but the revenue from the services from App Store has been increasing. So that's what is also priced and putting Apple prices higher. Why it is not moving much? It has actually moved a lot. But imagine, right, if a 120, $130 stock, in spite of the market movements also, they have to come up with a promising growth. iPhone 12 honestly was not a very big success. They have to continue with their app revenue, and Apple TV and is also now becoming a revenue generator. So by the end of the year, live video streaming will also be one of the segments where Apple enters in. So positive strength and expected for Apple. Can you name the top three stocks that you trade on? I trade on the top three stocks. So I bought Walt Disney, and I've been telling everyone this. I bought Walt Disney in 2012. I still have it. Um, so that was one stock which I bought. Currently, under the COVID-19 situation, Walt Disney did come down. But given now how it is challenging Netflix and video streaming, I think the stock has a good potential. So longer term, Walt Disney is what I personally trade into. The stock, uh, never, I was never fond of Tesla, but now with Biden coming in and the rally which I've seen in Tesla, I'm inclined towards Tesla. So it is in my portfolio now. Again, these are it's my risk appetite. So I'm not suggesting or recommending you this, but this is normally what I'm doing. But a lot of my exposure is on dividend-based stocks. Verizon and Vodafone, the telecom companies, the 5G related companies. Very fond of the technologies of 5G is something which I look into. Some of my exposure is also in renewable energy. I mean, renewable energy is something which you should always look into, and definitely cruise liners. So Carnival Corp is currently, I have invested personally in Carnival Corp as well. Carnival Corp is a cruise liner. It came down and 70-75% during COVID, because there are two main cruise liners, Princess and there was one more, got positive patients. So the company got battered around 70%. The stock price went down. And now with vaccines coming in, their CEO has announced a lot of times that it's a cash-rich company, and the company can go very easily without a single drop of revenue throughout 2020. And 2021, August, coming next 7-8 months, it is expected that the bookings are going to be increasing. So Carnival Corp is definitely in my portfolio. This is one of those reopening stocks which I had my eye on. So these are few names, but obviously, let's talk one on one, and we can always discuss more stocks. Definitely, I mean, there is no secret as such. I mean, it's not that I'm always making money. I've made a lot of losses also, so I do not shy away from saying where I'm investing. So this is something which we can look into. One more thing, guys, I wanted to show you for those people who are interested in bonds. But so this is what your stocks portfolio looks like. Let me also quickly, since today is the last day, so I just want to share everything I can, at least most of it. Let's make most of it. This is a bonds portfolio, guys. This is for investors who have a higher risk appetite. Let me be very clear. Investors who have a higher risk appetite, we call them adventurous investors, because these are emerging market bonds, bonds of Maldives and Sri Lanka. Okay. The announcement of Pfizer's vaccine in the first week of November has weakened the dollar and triggered demand for more risk assets, especially emerging markets. More importantly, the string of vaccine announcements, Moderna followed by AstraZeneca, has given rise to hopes that normalization of global economy might happen by second quarter of 2021. So this makes the bonds of tourism department well strategically located. Now these are high risk bonds. Their ratings is triple C plus. Okay. And both these countries, the Republic of Maldives Ministry of Finance Treasury bond and Sri Lankan government bond, both of them have a high debt service obligation, which will continue till 2022. Okay, so they have a high risk, but if you see the yield to maturity, all these bonds, so Sri Lankan bond will mature 2021 in July, and the yield to maturity is 26%. Coupon is 6%, right? Coupon is the interest which you get over your bond, and the yield to maturity is if you buy your bond and hold it till the expiry or till the maturity of the bond, this is the expected return which you get, 26%. While Republic of Maldives, 24%. There is an initial margin and a maintenance margin. And since we will be, this is directly from the exchange because derivatives are not available for these bonds. So they have a lot size of $200,000. Wherever you do, whichever exchange you do from, there will be a lot size of $200,000 because bonds are done in lot sizes. So there is an initial margin, maintenance margin, which you have to keep. But please understand this. I'm repeating this again. These are high risk bonds, and that's why their maturity is high, their yield is high. You can make a decent amount of money, but then it comes with a risk. Why? Because of this reason. See, Sri Lanka recently repaid 4.2 billion in foreign debt and avoided sovereign default. Okay, their forex reserves have dropped. Sri Lanka is about to receive an injection of around $700 million from China Development Bank, and that can increase their reserves and improve its loan servicing capability. Uh, Nevertheless, concerns the government's capacity to meet its debt servicing cost. It might continue to persist. Uh, Sri Lanka is expected to secure financial assistance from IMF and donors in 2021 and 22. The political party of Mahinda Rajapaksa has won, and it has improved the political stability in the country. So there is an expectation of more foreign investment into Sri Lanka, and that's why the bonds are expected to do better. But as I said, Maldivian bonds, Sri Lankan bonds, these are emerging market bonds, but this is for investors who have a high risk appetite. I'm repeating it again and again. Is it good to buy hospitality stocks or airline stocks? If you're buying airline stocks, Southwest is top the charts. They have very good balance sheet and it's a domestic airline. So I would prefer a domestic airline anytime over international airline. Other stocks like Boeing and Airbus, um, I feel it's a good point if you buy now, keep it for a few years and see. Because the once the vaccine comes in, travel starts. Definitely, when the situations go normal, all those stocks which were good and better during COVID are going to reboost and reopen. So it's not a bad idea. It's definitely not a bad idea. But please pick out good names and first talk to your financial consultants and experts before you enter into it. It's a good idea. Airlines like airliner stocks like Delta, Southwest, Air Canada, perhaps, Boeing, Airbus, these kind of could be good. Avoid American Airlines and others. But Southwest definitely has been recommended a lot of times from our end as well. So you can look at Southwest Airlines. And in hospitality stocks, the restaurant chains like Darden Restaurants, which is the parent company for Olive Garden chains and Apple McBee's, all these, the bigger restaurant chains, the hotels like Hilton, Accor, these kind of companies can also do really well because all these companies are better during COVID. And now, once the vaccine comes out over the next 1 or 2 years, the company might get back to its original levels. So it will be a good idea. Right. One more thing, guys, since again we are talking about it. Yesterday I showed you seasonality of orange juice. We are also doing a lot of seasonality trades. But before that, let's quickly discuss about the outlook for 2021. That is something which is remaining before we look. How about the hotel stocks? So that's what I was saying. The hotel stocks. Uh, the hotel stocks like Hilton, Accor, these are good companies which you can look into. Hilton is worldwide, so that is definitely. We have a feast portfolio. I see if we made it a few weeks before. Let me see if it is still there. Feast portfolio is financial, entertainment, airline, um, and something. So we had that. Or I can send you guys this later on. I had the feast portfolio with me. Okay, I can send it to you guys later on. So look into financials as well. JP Morgan, Citigroup, even the financial stocks were undervalued during this time. So entertainment companies like Walt Disney, financial stocks like Citigroup, airliners like Southwest. So these kind of companies can be good. Outlook for 2021. I kept this for another webinar altogether in January, but since we had this great week, I would just like to share this with you. Uh, Very quick, what we are expecting. The major macro policies, uh, the vaccination programs, which was a surprise actually, sooner than expected. So that could actually rule over the other quarter for the first 3 months, Jan, Feb, and March. So the Q4 is expected to be much more, uh, I should say, less gloomier. Sorry, after this Q4, the first quarter, which will start in 2021, can be very good. So the impact of the previous quarter can be neutralized, and a medium good outlook is what is expected. Recent announcement of successful anti-COVID-19 vaccines, real hope in the pandemic. Uh, the jobs data in US and Europe is still soft and weaker, so you have to be careful about that. But good point is around a $900 billion stimulus is expected by the US Congress. Now, that is something which is going to keep stock markets perhaps rallying again and again. Because hopes of a higher stimulus and more money injected into the economy can definitely keep stock markets happy. So, and by the same token, gold prices might bounce and dollar continue to be on the dovish side. The Fed Reserve and the European Central Bank are expected to keep the uh, printing of currency going on, so they're not going to increase any interest rates. That is what is expected. Fed may not raise rates until 2024-25. That's a big thing. If they keep the interest rates low, then definitely positive for stock markets. We are looking at currencies. A widespread belief consensus that USD could be continuing to head lower in 2021 due to, again, deficits. Expected growth recovery should reduce the demand for dollar. Zero yield environment. Emerging market currencies could again be benefited. So just keep a check. China could be an exception due to a clear yield advantage versus US treasuries. So emerging market central banks will also not increase rates that soon, but anytime emerging market currencies could be a better idea as compared to dollars. Commodities, gold still expected to be on the higher side. Oil has witnessed a rally after the vaccine news came in, but then we have to understand that there are few things. OPEC is going to start production again in 2021 to increase the production. Libya is still contributing. Iran deal, if Biden comes in, he might change the foreign policy with Iran, and Iran might start contributing again to OPEC. So this overall can increase the supply of oil. So we are still expecting oil to trade around $40 to $50 range, not more than that. Stocks are already trading higher. So 2020 returns have gone pretty high. If you see emerging markets in particular, they have handled COVID better than the West, and they have recovered faster. So Chinese, South Korea, Taiwan, these are three countries that may witness growth this year. The anyways, the central banks are approaching a lower policy, which means more stimulus, lower interest rates, weaker dollar. So earning can grow for emerging market economies. They are reopening. They are very positive for equities. So this is something which you can. Selectivity is required, and China remains a top pick. So that's good. In terms of sectors, industrials, materials, financials are strong players. Technology trends like e-commerce, cloud, 5G, and AI, and digital health. This is something really important, guys. Digital health companies can be again very focused and could be a key components of growth, right? Then there are some fixed income like bonds. IG corporate credit have witnessed a fantastic year due to. So there are investment grades, guys. Emerging market bonds are also there. There have been so many defaults this year. Zambia being the latest, which has shown default in the coupon payments. The credit quality in emerging markets should improve, especially after the recovery in China. So that is the only expectation if you want to invest into emerging market debts. Few risks which will continue in 2021. Hard Brexit, still a plausible scenario. Second wave of COVID is hurting already major parts of US and Europe. So maybe in the Q4 we'll see how the recovery works out. If there's any delay in vaccine or if it is not effective, then this whole stock market bubble can burst really fast. So you have to be very, very careful. Stimulus should be sufficient. If it's not, again, it can affect the stock markets. Uh, so that is something which we are looking at. Just a small year till date return for you. Gold has moved up 21%. Nasdaq 40% up, S&P 14% up, Chinese equities 28%. What has gone down is the UK index and Brent oil also by 26%. So this is the outlook what we are looking at. Which are good renewable stocks? Look at companies. First of all, you can look at a renewable share basket. We have that in our portfolio. Do look at it. It will really help you out in sorting out renewable companies. But then there are companies like Jinko Solar. There are renewable ETFs also. Companies which are related to wind energy. I can definitely give you some good names. I have that portfolio. I'll send it to you. Please reach me out on the email and we'll send this to you. Is it possible to share this document Outlook 2021? I really have to check. Better you click a picture because it's just a rough PDF. I mean, I was just preparing some notes, so I just thought it will be helpful for me to quickly, just read the document out for you. That's all. Um, okay, good renewable stocks. Why Astra, Airbus, and Accor are showing no data? Uh, Airbus, Accor, because these are European stocks, and if you have a demo account, then European stocks are not activated. But if you have a live account, you can activate it. You'll be able to see it. You meaning buying in first quarter? Uh, like this is the outlook for 2021, but most important part will be the first quarter. Let's see how it works, because a lot of things are going to happen in first quarter. The inauguration, Biden is going to finally come in power in January, and there will be Senate elections also. So those are the uncertain points. But nevertheless, I think there will always be help and suggestions if you reach us out. And the most important part is to keep yourself prepared for the risk. See, guys, remember this thing. The whole point of doing this session for 5 days was to uh, prove a point. And that point was that you don't have to have a big experience or a CFA or a FRM to understand financial markets. Anybody can do this with hard work and a proper tracking of the watch list. It can frame anchors in your mind and can do it. Uh, Question: what are the sectors Biden could impact? With Biden coming in, the most important sectors which will be impacted, let me show you graphically also while I explain it to you. Most is renewables, then industrials. I have actually a PDF for this. Biden, Biden stocks to watch out for. Okay, right here. Look at this. These are the important ones. Green, renewable energy. Let me switch. Okay, you can see this already. Look at this. Green, renewable energy, infrastructure, healthcare. And there are a few stocks which you can also look into uh, while we are checking this document out. Here it is. Tesla, First Solar, Plug Power, Next Era, which is electric utility. Then there is renewable power, Brookfield Renewable Partners. This is for renewables, some construction companies. One sector, guys, which I have not added in this was, and that is keeping in mind the respect for the country and the nationals over here. Uh, the cannabis sector or the marijuana sector, which I'm not shown in this portfolio. There are a lot of companies, Aurora Cannabis and Canopy Growth and others. So a lot of Democrats, in fact, are already trying to pass a resolution to remove cannabis from the dangerous substance list. So Democrats have always favored the growth of cannabis and marijuana. So uh, there are a lot of Canadian companies. If if you would like to have a discussion over it, we can have a one-on-one conversation. Obviously, I'm not added in these portfolios or anywhere in this part of the world. We don't really talk about it, so I'm not doing that. but then that is also one sector which is going to get benefited with the Biden, right? So now I think we have reached to the end of this point. Now from here, more and more practice. Please reach me out if you have want to do one-on-one sessions, and talk to your relationship managers. Use these demo accounts. Uh, this is something, guys, which you have to understand. It's all in your head. For those who think that this is some rocket science, it's not. I've tried to make it much and more simpler. For those who thinks that charts or these things are just for analysts, they are not. It's all inside your head and starts from the head. If you believe in your head that this is something which you can do, then you do. You have to steer your own ship of investments. You should not be relying on anyone. I mean, for second opinion, yes, but then you should know if you have to take this thing, then you will take. It all starts in your head, it goes into your heart, and once it goes into your heart, you're aware about it that yes, I can do it, and then it comes out as an energy, and that's where you start taking interest into these things. So uh, it's been a great privilege. And before I leave, on behalf of Century Financial, my entire team, and myself, I would like to thank everyone who has a friend or a relative or himself or herself is working in medical or healthcare industry. Um, the COVID was a bad time. It's a bad time for everyone. And if anyone has a friend or a relative, or if you have gone out there and treated patients and risked your life for us, that's the biggest thing anybody can do for an unknown or for a stranger. So I would like to thank those people, the first responders, the midwife, the doctors, and I would really want to express my gratitude from my family personally that you have done this for us. There could not be any better heroes. Nobody could be a better hero than you. Uh, wish you very good health. If you have more doubts, reach out to me. I'm available to everyone for a one-on-one session, free of cost, no charges. This is the least we can do from our end. Do review us on Google. Please put comments if you liked it, if you don't like it. And we are definitely going to have different webinars and different sessions, and I'll be available for all these sessions with you. So once again, please stay safe. You have a very good Christmas, a great New Year, and before you celebrate 2021, give it some time and see how the first 6 months turns out. If it is anything like 2020, then we don't want to spend any money in celebrating 2021. Just kidding. I hope 2021 is amazing for all of you. I wish you a Merry Christmas, a great New Year, and a great health to all of you. So, with this, I would like to take a leave. You have a great night, a great weekend. My name is Yogesh. Please reach me out if you have any doubts later on. Thank you so much.